Hello, we have chosen to do Nike for our company project. This is by Gigi Downey, Jesus Mendoza, and Catherine Tice. Some basic company facts for Nike is the official name is Nike Incorporated. The stock market ticker symbol is NKE. It is traded on the New York Stock Exchange. It was incorporated in the state of Oregon. The official web address is www.nike.com/. Mark Parker is the CEO, and Mark Parker is also the chairman of the board. The annual stockholders meeting is September 22nd, 2016. Nike provides a wide range of products and services. Some of the top 5 products could be labeled as athletic clothing, professional sports gear, athletic lifestyle wear, sports equipment, and footwear that's driven by trend. Some of the customers for Nike could be the kid who wants to have the coolest shoes for school, the sneakerheads who want to have the newest Jordans when they come out, gym goers who need a sturdy and comfortable shoe, professional athletes who need reliable equipment and gear, and then the trendsetter who likes to style athleisure wear.
This data represents Nike's financial highlights for fiscal years 2016, 2015, and 2014. This data indicates that net income has increased throughout the years. Long-term debt has also increased. The cost of dividends per share and earnings per share have decreased, however, not very significantly. Nike prepares consolidated financial statements. This is necessary because you can keep track of what is going on exactly in each subsidiary and the company itself. We can analyze what has generated more profit and what has incurred more expenses than others. This is also very helpful for the management of the company when they are making decisions. Management and responsibilities. The general tone of the management's discussion and analysis document is very positive and optimistic. The most recent year was positive, and they have many hopes and plans for the future of their company. Nike is the largest seller of athletic footwear and apparel in the world. They hope to continue achieving long-term sustainable revenue growth. In the future, they strive to reduce product costs for consumers while investing in new technologies and reducing waste. As for the management's responsibilities, under the supervision of the Chief Executive Officer, Mark G. Parker, and the Chief Financial Officer, Andrew Campion, PricewaterhouseCoopers LLP has audited the consolidated financial statements and the effectiveness of internal control over financial reporting. The committee assesses the financial statements and reports the information to discuss with the Chief Executive Officer and the Chief Financial Officer. The committee is responsible for discussing policies and meeting with the Chief Information Officer and Chief Security Officer to discuss risks due to data protection. They also resolve disagreements between management and the independent auditor based on financial reporting. This is only a small fraction of the responsibilities of the executive committee. This graph shows the dollar amounts for each category and the percentage of these categories in comparison for the total of 2016. In the upper section, we can see that the current assets takes up most of the space with 70%. In the second half, contributed capital is the largest amount at 36.4%, followed by current liabilities with 25%. Since this information is gathered from the balance sheet, the totals are equal or balanced and represent 100% of the assets or liabilities in stockholders' equity. Working capital and current ratio. For Nike, the working capital in 2016 was $9,667,000 with a current ratio of 2.804. In 2015, the working capital was $9,255,000 with a current ratio of 2.462%. Compared to the other working capitals that we discussed in class, Nike's increase has actually been higher. For the current ratio, Nike also remains above other companies, being at over 2%. Nike doesn't have as much debt compared to other companies, which makes current liabilities not as threatening to our company.
Moving on to question 9, statement income. So for the year of 2016, Nike had a sales revenue of $32,306 million. The cost of goods sold was $17,491,000. The gross profit was $14,971 million, with operating expenses of $7,191,000. The income from operations was $3,760,000. Other expenses was $140,000, and income before tax was $4,623,000. The tax provision for tax was $863,000, giving Nike a net income of $3,760,000. For the year of 2015, Nike had a sales revenue of $30,601 million, and their cost of goods sold was $16,530 million. The gross profit margin was $14 million. Operating expenses was $6,679,000. Income from operations was $3,273,000. Other expenses was $58,000. Income before tax was $4,205,000. Provision for tax was $932,000, giving Nike a net income of $3,272 million for the year of 2015. Moving on to the fundamentals of financial accounting ratios. So for 2016, the net profit margin was 11.61%. Its assets turnover was 1.51%, and the return on equity was 30.1%. For the year of 2015, Nike had a net profit margin of 10.70%, asset turnover of 1.42%, and return on equity of 27.8%. What this indicates for the net profit margin is that for every dollar Nike earns, it is able to collect 11.6 cents as profit. This further implies that Nike is able to pay any outstanding debt to collectors if necessary, indicating its ability to pay. What the turnover asset ratio indicates is that it needs fewer assets to generate revenue. For its business industry, Nike is able to turn its assets into revenue, pay off debts fairly quick. So this would be an example for this would be if one of its debts collector was calling and asking for it to, or trying to collect its debt sooner than the time expected. Nike would be able to sell its assets and turn it into cash in order to pay off those debts. What the return on equity ratio indicates is that based on its current position, Nike shows that it has been able to generate higher income per dollar in its outstanding shares. This means that the company has been running well, being able to pay higher dividends to its investors.
In conclusion to all this information, Nike is doing well. Net income-wise, they are increasing. However, our earnings per share has been going down. Nike has been able to increase sales. We can tell this is true because revenue has been increasing since 2014. Even though net income and revenue are increasing, total liabilities, unfortunately, and long-term debt are growing as well. Nike has sufficient working capital to pay its bills easily. The company is continuously coming out profitable. Long-term debt has increased, but the company does not have any issues paying its debts. The company is moving in a direction of raising profitability and releasing new products that sell quickly and that are in high demand. The sportswear industry has really taken off in the fashion industry in the past 5 years, which is giving Nike a lot of competition. Nike has held its ground and continues to be the #1 athletic brand worldwide.